Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures little changed ahead of Federal Reserve Chair Jerome Powell's Jackson Hole speech. Investors showing caution ahead of the remarks, with the S&P 500 down 5 days in a row. Investors largely expect Powell to indicate that policymakers will start cutting interest rates next month, but it's not a sure bet. Cleveland Fed President Beth Hammack telling Yahoo Finance she sees a case for keeping rates modestly restrictive.
My biggest concern is that inflation has been too high for the past 4 years, and right now it's been trending in the wrong direction. And so I think it's really important that we stay modestly restrictive to make sure that we can bring inflation back under control.
Plus, Nvidia in talks with the U.S. government to sell more advanced AI chips to China. CEO Jensen Huang telling reporters the government will make the decision on whether they can offer the new product. The CEO's comments coming amid reports by The Information that it has instructed component suppliers to stop production related to the H20 AI chip.
Offering a new product to China for the data center, AI data centers, the follow-on to H20, that's not our decision to make. It's up to, of course, the United States government. And we're in dialogue with them, but it's too soon to know.
And more on those reports by The Information about Nvidia instructing those component suppliers to stop production. Nvidia issued those orders this week after Beijing urged local companies to avoid using the H20. That's according to The Information, which referred to a chip designed specifically for the Chinese market. Chinese authorities recently sent notices to a range of firms discouraging use of the less advanced semiconductors. That's according to Bloomberg. Got to check in on stock futures. We are seeing indications for a higher open this morning after the selling that we have seen as of late. But of course, everything could change once we hear from Jay Powell. Right now, a futures indicating a stronger open, especially led by the Dow. Let's dig into that top story of the day. Fed Chair Powell set to speak at the Jackson Hole Economic Symposium in about an hour. We're tracking the market action as investors await clarity on the Fed's rate cut path. Joining me now, Fed correspondent Jennifer Schonberger, senior reporter Ali Canal live at the NASDAQ, and senior markets reporter Josh Schaefer. Of course, our Jennifer Schonberger is there on the ground in Jackson Hole. So what's the early vibe there this morning about what we could hear from Powell?
Good morning, Julie. It is the moment that markets have been waiting for all summer. Fed Chair Jay Powell slated to give his last speech as chair here in Jackson Hole. And while markets are looking for any signal for a rate cut next month, it'll be interesting to see whether Powell lays the groundwork for near-term policy direction or whether he takes the opportunity to give a broader policy speech as he marks his legacy here in Jackson Hole. We know that we are expecting changes to be proposed to the Fed's monetary policy framework. They're expected to drop that average inflation targeting that they had put in place 5 years ago. Remember, the Fed amends this every 5 years. So it'll be interesting to see what the Fed does there. In addition, given the fact that we have seen so much pressure from this White House on the central bank to slash rates, it'll be interesting to see whether the chairman sort of takes a stab at the importance of Fed independence. So lots of things to be looking for in that speech this morning in just under an hour's time, Julie.
And Jennifer, among other things, there is the question of the so-called framework that the Fed uses when it applies it sort of to how its approach to how it makes policy. It has had a framework sort of through the pandemic era to now, and there's a lot of talk about what tweaks it might make and that could be reflected in his speech as well.
Right. As I was just saying, we are expecting that the Fed will drop that average inflation targeting that was put in place in 2020, just before the onset of the pandemic. It was a time during which inflation was running a lot lower than 2%. And so the Fed had sort of said, well, maybe we can make up for shortfalls that we've seen in the past by letting inflation run a little bit hotter. And some analysts have said that that strategy contributed to the Fed being late in trying to slay inflation and having to take on the most aggressive rate hiking campaign since the 1980s. So we expect that the Fed will just go back to adopting just that 2% inflation target.
And this all comes after a week that has been an unusual one in that, a lot of the high flyers that we've seen this year have gotten hit hard, Josh, even ahead of the sort of back and forth on, what we might see from Powell today.
Yeah, it's been interesting, Julie, because what's been driving the market this week has really just been sort of an unwind of a lot of that popular tech AI trade. And I'm not sure necessarily what Jerome Powell can say today will necessarily save that trade, right? That's probably hinging on Nvidia earnings next week. But what we have seen is just a rotation in the market, right? You've seen a lot of the laggards start to catch up. You've seen some interest rate sensitive sectors like real estate. You've seen home builders rally in the last couple of weeks. You've seen small caps catch a bid in August. Those are all areas of the market that usually move significantly when Chair Powell is speaking. So it'll be interesting to see if he feeds into the near-term interest rate cut that markets are anticipating in September, then perhaps that helps those areas. If Powell comes out and is a bit more hawkish, he does not commit to cutting in the near term, then maybe you start to see an unwind of that trade, which again has really been sort of the most popular trade to the upside for the market in August.
And Allie, what are we seeing in terms of the CME Fed Watch, right? That always bounces around in terms of what it's pricing in for September. I imagine it's going to go on a wild ride today.
Yes, so that will be riding on the tone of Federal Reserve Chair Jerome Powell. And we are seeing less conviction when it comes to a September cut compared to where we are a few weeks ago. And we've been really seeing that since that labor market report where we saw those significant downward revisions. We are currently hovering at around 70% for that September cut. About a week ago, we were closer to 90%. Markets are still pricing in 2 cuts by the end of the year. But again, less conviction there. There was near certainty a few weeks ago. Now we're just around 80%. So this is coming at a time where many Wall Street economists, those prominent names on the street, are also confused about what comes next. We don't have a general consensus among those Wall Street firms that we'll be seeing that cut next month. Morgan Stanley, for example, is still anticipating no rate cuts this year, saying that the Fed is going to prioritize the inflation part of its mandate. And considering what we saw earlier this week, with the Fed minutes and other types of commentary from Fed officials, they are concerned about the inflation side, especially after that hot PPI report. We saw services tick up a bit and core goods is also starting to firm. So we'll have to see what Jerome Powell says when it comes to reaching that 2% inflation target and how confident he is that the central bank can get there with rate cuts or maybe possibly without rate cuts and being in this more restrictive environment.
And naturally, Allie, one of the other assets we'll be watching will be the bond market, the treasury market, right? And we have not seen a lot of big moves in that market lately.
No, bonds have been pretty boring, right? They've been moving in this range-bound area. The 10-year yield is hovering around 4.3%. The 30-year has been chill. And the Treasury market, they seem to be pricing in that September rate cut. Now, bonds, of course, we watch that closely when it comes to what stocks are doing. And when we see yields spike, that usually weighs on the major indexes. But yields, apart from what we saw earlier this spring when we saw that rapid rise in yields, they really haven't been doing too much, and they are not reacting on these headlines as we saw in the past. So that is encouraging when it comes to the health of this bull market. Other types of trades that we'll be watching, Josh was just talking about the tech trade and the AI trade at large. Over this past week, we've seen that struggle a bit, and there's been greater commentary about whether or not we are in an AI bubble, whether or not other speculative trades like Bitcoin, for example, could be approaching bubble territory, and Bitcoin prices, for that matter, they are down about 4% over the past week. So it feels like the bulls need something to get bulled up again. We'll see if that something is rate cuts, or at least the promise of rate cuts from the Federal Reserve.
Yes, we will see. Thank you so much, Jennifer, Allie, and Josh. And stick with us, of course, for full coverage of Jay Powell's speech. That's coming up at 10 a.m. Jen's going to be there on the ground. We'll hear from Powell. And then, among others, we'll be reacting to the speech with former Fed Governor Jim Bullard. We're also going to hear from James Fishback later on after the speech. He's going to be speaking to Jennifer as well. Well, Nvidia has reportedly asked some of its suppliers to stop production of its made-for-China chip. That's according to the information, as Chinese officials crack down on Nvidia's sales in that country. Nvidia CEO Jensen Huang, during a visit to chip partner TSMC, told reporters the company was in talks with the U.S. over a new chip for the China market, but it was not the company's decision to make.
offering a new product to China for the data center, AI data centers, the follow-on to H20. That's not our decision to make. It's up to, of course, the United States government. And we're in dialogue with them, but it's too soon to know.
Let's bring in Dan Howley, senior tech editor. And, he says it's not our decision to make it. It also puts the company in a tricky position because there are also reports that Beijing is telling Chinese companies to not necessarily buy those chips.
Yeah, it's an interesting issue that they're kind of facing right now. It's, Nvidia, obviously they have the H20, the ability to ship them now to China. That 15% cut then goes to the US. AMD obviously doing the same thing. But, the Chinese government has been telling different specific companies, it seems, not to use NVIDIA's chips over fears of some kind of security issue or to ensure that they don't rely too heavily on a U.S. company and kind of favor the homegrown chips. And so, that does set up some issues for NVIDIA. But I think, the big thing to look at is it's been an advisory so far, not necessarily a, firm do not use NVIDIA chips at this point. Developers still prefer to use NVIDIA because of the CUDA software they have. And then, you have this potential next generation chip that they could ship to China. It would be based on the Blackwell architecture. It's not going to be the most powerful Blackwell chip out there. That's what the US has and ships to its allies. But it still would be better than the H20 overall. And so, there's the prospect of these developers being able to get their hands on a newer, more powerful NVIDIA chip. You got to imagine that they want that, right? And so I do imagine that there'll still be orders going to China if the U.S. does approve this. As Jensen said, it's not up to the company itself now, but there's got to be orders that'll come from China regardless, because there is this insatiable demand for NVIDIA's chips across the world, and though China isn't getting access to the most powerful, it still would want to get access to what they have.
And just to take a step back here and put all of this in perspective, Dan, of course, the company's reporting its earnings next Wednesday after the close of trading. All of this discussion about China aside, only about 10% of the company's sales, something like that, come from those sales into China. And it's something that, analysts are well aware of already. You could argue maybe it's priced in, but just to sort of situate, the China market and how important it is or not to NVIDIA.
Yeah, I mean, look, when they initially kind of like excised the outlook for China going forward, the analysts, they said, okay, look, we don't have to worry about this anymore, right? This is when the ban kind of went into place. They figured, okay, we don't have to question, will they, won't they have revenue from China? That's out of here. Now it's just boom, everywhere else going forward, we're good. Basically, the stock just went up from there. Right, analysts were happy because there was that kind of unknown was taken out. Then China was in play again, and the stock went up because people thought, hey, whoa, there's more revenue potentially. I think that once this kind of situation is figured out, it may just be in flux going forward now. I think the broader thing is that companies are going to be or analysts are going to be looking at companies that are buying outside of China. And how that demand is keeping up. Don't forget, NVIDIA says around 50%, little less than 50% of their revenue comes from the Microsoft's, Google's, the hyperscalers out there. And so the fact that they would continue to buy is very important. NVIDIA has been pushing this idea of sovereign AI, where companies buy their own, countries buy their own chips to stand up their own kind of AI capabilities. That's going to be very important going forward. So I think, there's a bunch of different scenarios outside of China, as you point to, Julie, that, yes, it is an interesting part of the conversation. It's an important part of the conversation, but really the bulk of their revenue still comes from those hyperscalers. How they're buying, how much they're buying is going to be the big question going in. And then perhaps Q3 outlook, if they do offer something along the lines of China revenue impact going in there. But that's still very much up in the air.
Yeah, most definitely. Looking forward to digging into all of it with you, Dan. Thanks so much. Coming up, we're going to count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We are watching Meta and Google, BJ's Wholesale, and Zoom. First up, Meta and Google inking a $10 billion deal. Google winning the multi-billion-dollar cloud contract from Meta. It'll span over 6 years. The Information reporting the news of the deal, which comes as Alphabet looks to ramp up big cloud contracts to compete with Amazon and Microsoft. Next up, BJ's Wholesale lifting its profit forecast for the year. While earnings per share were strong, comparable club sales excluding gas did miss expectations. Citi analysts who have a buy rating on the stock said the print should calm investors that, quote, nothing is broken with the business except some macro choppiness. Finally, Zoom topping second quarter expectations with revenue up nearly 5% year over year. The video conferencing company also raised its full year revenue guidance on demand for AI tools. Its AI companion feature now has, quote, millions of monthly active users, up 4 times compared with the prior year. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. We're less than an hour away from Fed Chair Jerome Powell's commentary at the Fed's annual policy symposium in Jackson Hole, Wyoming. Investors are closely watching the speech for any sign his hawkish policy stance could be softening. Joining me now, Marvin Lowe, State Street Senior Global Macro Strategist. Marvin, it's good to see you here. We've been talking about this for a while here, looking ahead to this speech to try and figure out what kind of tea leaves, what kind of hints he's going to drop. What do you think? What is he going to signal today?
You know what? I don't think that there's going to be the revelatory statement that's coming from him that everyone's hoping for. The Fed is still data dependent. There's still enough uncertainty around inflation prices to keep them a little bit cautious. But at the same time, the jobs market is showing signs of weakness, not necessarily the collapse that I think would signal the need to cut in September or definitively say that a cut is coming in September. But, the Fed is starting to look at when it should restart the cutting process. And September is something that they're going to think about. It's just not going to be as clear as the market hopes.
Okay, so that's not what people want to hear, obviously, Marvin,
Yeah.
but I'm sure people are going to try and take away stuff from it nonetheless. On the framework question, I'm curious what you think. And just so viewers know, again, there is sort of an approach that the Fed takes when applying its dual mandate. That approach changed, in 2020, 2021, and now they're talking about changing it again. What does that change look like, and how could that affect how they make policy?
Yeah, it's every 5 years. The last time they changed it was with a bit of gravitas in the middle of the pandemic. They moved to, for the viewer's sake, they moved to a flexible inflation target, which allowed them to let inflation run hot because they would think that at times it would run cool and then it would average out to 2%. That hasn't worked out very well for them. So I actually think they're going to go back to basics. They're going to say that there's a 2% inflation target. Congress mandates that they focus on full employment and stable prices. But it's really going to solidify the view that inflation is, the number one concern for the Fed, and theoretically, it would decrease the flexibility that the Fed has if inflation is overshooting. So it would be a hawkish message if it weren't for the fact that we're also at the same time wondering who's going to run the Fed, whether or not there's going to be a change in tone, whether or not they're seeing the data different in terms of folks that might be coming on the board. So it creates a little bit of confusion, but at the same time, it is generally more hawkish relative to a flexible average inflation target, which is what they're running on now.
Well, but Marvin, to your point, if the Fed is seated with Trump loyalists, is the framework even relevant?
You know what? The Fed is structured to withstand administrations. It is ultimately relevant. If it becomes less relevant from an investor's perspective, if really, there's a pushback that, well, we don't really think the Fed is going to follow their mandates, then you wind up with independence issues. And I think that that's potentially one of the worst case scenarios for the market because a stable Fed that you can understand is really one of the cornerstones to the strength of the U.S. market.
Do you think, obviously Jay Powell thus far has been very terse with regards to questions about Trump's attempts to intervene. Do you think, given that this is his swan song at Jackson Hole as Fed chair, that he will be maybe a little bit more expansive on that point?
I don't think so. I really think he respects the institution. He respects the way it's structured. It's withstood, countless administrations. There was at certain points much more pressure on the Fed than we've seen over the last 30 years, and we've seen how the Fed has flourished over those last 30 years. So I think he's going to continue to really represent the institution with the power that Congress gave it.
Finally, what does all this mean for strategy? Where are stocks going? Whether there's a cut or not in September.
Yeah, so I think one of the mistakes that the market has made is that while we start talking about September, the natural progression of that conversation is that we're going to have a lot of cuts after September. I don't necessarily think that's true. If we go in September and we go in December, we're still effectively following the Fed's targeted approach that they set out in the beginning of the year. So there really hasn't been that much change. I think the markets have gotten ahead of itself. I think we really need to think about if this is a buy the rumor, sell the fact type of thing around rate cuts, and really thinking about where policy ultimately needs to settle, where it should settle, and then really think through where it will settle. Because again, the change in the administration does change, the change in Fed leadership does potentially change the timing of all of that.
Marvin, thanks so much. Looking forward to that speech in 30 minutes. Thank you. Coming up on Yahoo Finance Opening Bid, Executive Editor Brian Sazzi is joining us now. Saz, what's coming up?
Well, Julie, don't let my casual appearance today on this Friday mislead you. This is a big day for markets as we await that speech from Federal Reserve Chair Jerome Powell. And Julie, I don't know about you, but I'm emotional. This is Jay's last big speech at Jackson Hole. I'm a little sad. I don't know if President Trump is sad, but I'm a little sad.
But not sad enough to put on a blazer for it.
No, we're keeping it a little casual, Julie. I need to be relaxed today.
Respect. I'm wearing my tennis shoes. Not that anybody can see that. Shh. All right, that does it for Morning Brief. Much more ahead on Yahoo Finance.